Hi, and welcome to Advanced Concepts of Spread Trading. In our last webinar, The Basic Concept of Spread Trading, we covered the definition of spread trading, understanding a spread chart, types of future spreads, and the key features and benefits of spread trading. And just a reminder, in all cases, spread trading attempts to capture the price differential between two contracts. The idea is that of the two contracts in a spread, one will outpace the other in price. In this webinar, we will present two spread trade opportunities demonstrating all the key features of using calendar spreads. The first example will have a seasonal time frame, and the second trade example without a seasonal time frame. We will apply the specific trading method used at Just Spreads. The calendar spreads presented are exchange-listed contracts. Here are the key features and benefits for using calendar spreads. Chartability. Identical contracts means pricing is consistent and allows for all charting detail, specifically bar charts, where we have an open, high, low, and settlement price. Easy access. The spread codes are simple and charts always pull up quickly and cleanly. No legging into spreads or ratio calculations required. Exchange-listed spread contracts have lower and more stable margins and are the only spreads used at Just Spreads. Here are the key elements to the trading method. We use swing lines to identify specific trends suitable for position trading. Bar chart analysis to trigger us into and out of trades, specifically reversals, double bottoms and tops, high to low pattern recognition, and consolidation. We use price projection based on our swing lines for a calculated approximation of future price. Seasonal statistics, when available, provide an optimized date or time frame for entering and exiting a trade and create anticipation of price behavior during a specific time period. Our first example is the December-February live cattle spread. Here we have a plain bar chart with an arrow showing our seasonal entry date of September 15th. Once we apply our swing lines and other chart detail, the trade begins to take shape. On September 17th, we had a daily reversal occur identified as swing high number 2, which triggered us into the trade using a market on close order or the following day with a market on open order, and always with a trailing stop order. In either case, we have improved on our entry price beyond using just a seasonal time frame to enter the trade. We begin to see a lower high, lower low pattern develop. And just as a traveler would use a map to anticipate the road ahead, we can do something similar by taking the difference between the swing low number 1 and swing high number 2 and adding this to our swing low, which is minus 205. In just a few days, the market reached our near-term price objective and then reacted the very next day with a reversal at minus 210. Here is the method used to calculate this near-term price objective. This smaller time frame, using the most recent swing lines, reversals, and price projection, helps to confirm our trading method and offers a profit opportunity of around $300 while building our confidence to pursue the longer-term price objective. Here is the same chart, now focusing on the longer-term time frame. Again, by calculating the difference between swing high number 1 and swing low number 1 and adding this to our swing low, we can approximate or project a price objective of minus 297.5, identified as swing low number 2. When the market reached our price objective, we closed the position and took profit. A double bottom formed with a reversal, which confirms our expectation and trading method. This time frame used the dominant swing lines, reversals, and price projection, which again confirms our trading method and offered another profit opportunity of around $400 while still acting within the seasonal time frame for this spread to widen in price. Our next trigger to enter this trade occurred on October 20th, identified as swing high number 3, again with a reversal. We used the same technique to enter this trade and are still acting within the seasonal time frame for this spread to widen further in price. We can now anticipate a new price objective of minus 4.2 based on our price projection method. Regardless of whether you entered this trade once or twice, the approximate points gained was 1.8, or a profit of around $720. Let's look at the key points. We have reduced volatility to that of an outright of around 70%, reduced margin of around 70% to that of an outright, anticipation for this spread to widen in price during the period of September 15th through November 7th based on our seasonal statistic. We have proven reliability of bar chart analysis as seen by the reversals, proven reliability for the accuracy of swing lines to identify specific longer-term trends, and the benefit of a proven measurement method for price projection derived from the very same swing lines. When you combine all these tools, you have a clear roadmap for taking control and applying effective trade management. In this example of unleaded gas, we apply the same trading method without a seasonal time frame. We can anticipate a trade opportunity by the fact that the spread has narrowed in price to a previous low, remembering that previous highs and lows are natural support and resistance levels, and that a characteristic of calendar spreads is that they can trend from a high to a low more so than their underlying outright contracts. Further confirmation is provided with a double bottom followed by a reversal at 9:32. From this we recognize a trade opportunity with a limited amount of risk and enter this trade with either a market on close or a market on open order around 10:20 and place a trailing stop below 9:32. We then apply the same technique to manage this trade using a trailing stop and can easily identify three potential profit levels. First at 11:29, which is previous resistance, and then around 1200 after a daily reversal at 1250, and finally our overall price objective of 1326. The symmetry of these markets is clear when the correct tools are applied. So as you can see, our proven trading method provides a reliable roadmap across different markets and seasonal conditions. However, it is ultimately your account balance and risk tolerance that will determine how you manage your trading. Just Spreads provides these types of spread trade opportunities weekly and with daily trade management updates for the same trade until it is closed out. To learn more about the specific trading method and education for spread trading, please visit the Just Spreads website for a free, no obligation 2-week trial.